My name's Gemma. I'm one of the directors here at Cowgirls in the UK. I'm a director solely responsible for indirect tax, so VAT and customs duty. So I'm delighted that you've been able to join us this morning. Hopefully you'll find it quite interesting. We're going to share some knowledge with you about the issues that Hans and I have encountered since Brexit, and hopefully give you a few tips that you might be able to use in your businesses going forward. So our agenda is quickly running through some obligations and compliance issues. So that's both businesses that sell goods from the UK into the EU, and also businesses within the EU who wish to sell goods here in the UK. Hans is going to talk about the movement of goods and holding stock in the EU and the implications that we have for UK businesses post-Brexit. We've then chatting a bit about the complexities for UK businesses who are trying to move goods or trying to do business in the EU, and the same the other way. So EU businesses that are trying to do sales and sell goods in the UK. We then do quickly look at what's going to change in the near future, and there's a couple of quick tips about making sure that you get it right. So I've introduced myself. Hans, do you want to just give a quick introduction?
Yes, good morning to all of you. My name is Hans Philips. I'm a vet director in Belgium, working for Van Havermaet. Van Havermaet has about 240 personnel, and we have a separate VAT department covering mostly international clients who do business across Europe and especially also in Belgium. Okay. Thank you.
Okay, so a quick canter through the history and what's happened and when. So fans of Brexit will know that the UK formally left the EU on the 31st of January 2020. Those of us who were slap bang in the middle of it knew that it was a bit of a disaster, really. So the rules about what was going to happen, agreements across the board, not only in the UK but with the EU, were very, very last minute. You know, some of the proposals only came out in December of 2019. Businesses weren't given enough time to prepare. There was very little in the way of guidance and support for businesses. So really, on the whole, it was a bit of a disaster for UK businesses and us as advisors. So to try and help with that, HMRC and the government introduced an initial transition period that would run until the end of the year 2020. So this was effectively trying to give us an opportunity to ease ourselves into the new rules and the new compliance, and to understand everything that was now expected of us. During that period, HMRC said that there was going to be significantly reduced red tape, so less admin burden on businesses, and that they'd said that they were going to introduce a light touch. So where businesses did make errors, they were going to, look on these quite, not in the usual way. So they were going to sort of help businesses to get it right rather than penalising businesses straight away. So ways that they did that was some simplified paperwork. You'll remember that you were able to move goods cross-border without having all the correct documentation. HMRC allowed you an extra couple of months to get that documentation in place. They also introduced some administrative easements. So say, for example, historically, if you imported goods into the UK from a non-EU country, you'd need to pay import VAT at arrival of the goods in the UK or when they entered free circulation. HMRC brought in a scheme that allowed businesses to postpone that VAT. So it allowed businesses to account for the VAT on their VAT return, which meant that there was a cash flow benefit to businesses of doing that, which, was a significant, probably the only significant benefit of Brexit. Now, businesses in the UK will know that, it wasn't the sort of outcome we were all expecting or hoping for, or that the government was telling us was going to happen at the stage, when the referendum was announced and both sides were telling us about what they expected. There was a lot of impetus on improving opportunities for businesses in the UK. You know, there was a lot of talk about having new trade deals that would be with different countries in throughout the world that we weren't able to have trade deals with because of our membership of the EU. I think a lot of businesses have now come to the realisation that the cost of Brexit was quite significant. The Office for Budget Responsibility last summer provided a report that said that both imports and exports were 15% lower post-Brexit. They concluded that these new trade deals that the government had set up with the likes of New Zealand, with Japan and some other countries throughout the world had actually limited impact. So there was no actual positive impact on those trade deals. So businesses in the UK weren't, you know, selling more or receiving more goods from outside the UK. And also they said that the temporary non-compliance, so businesses getting it wrong, had meant that actually the tax take from the UK had actually been significantly lower, and the scope for errors was massively increased. Just 2 points to just touch on, really. We're not going to cover these in the webinar, but we just want to highlight that businesses that trade with customers in Northern Ireland, the position there is incredibly complicated. So those of you who are in the UK and maybe within the EU will have seen the news yesterday that you know, there is improvements there with the protocol for Northern Ireland, and changes are being put through Parliament. So we'll wait to see what that actually looks like. But it's just to let businesses know that do trade with Northern Ireland to be really, really careful and make sure you take advice where you're not sure about the VAT treatment. Similarly for B2B sales, so this includes businesses that are selling on marketplaces. So if you're selling, if you're in business and you're selling to a private individual or a customer in the EU, it's very, very complicated, and the rules can be quite tricky. So if you do sell those type of goods to those type of customers, then just make sure you're getting it right and making sure that you understand the obligations. Okay, Claire?
It's not changing over just for a minute. Sorry, I'm just going to have to reload it.
At least you know we're live, eh?
Again. There we go.
Thank you. So now I'm going to pass over to Hans to give us a view from the EU and specifically from Belgium, and how UK businesses, what UK businesses need to think about when they think about doing trade in the EU. Over to you, Hans.
Yeah, thank you, Gemma. Thank you for introducing me as well. Well, I would like to talk a bit about the changes from perspective that UK businesses will trade within the European Union. And as you know, before we had a European single market and customs union. I'm not sure if everybody was on mute, is on mute at this moment, so please mute yourself if you're not on as a speaker. Well, we had a single market, and that means that if goods are transferred across the border from UK into one of the other EU member states, there was no hard border, there were no customs there, and you could simply transfer the goods, and you only had to worry about VAT implications. But now, since the European single market is still there, but UK is no longer part of it due to the Brexit, well, what we did was we went over to a trade agreement between EU and UK. And the trade agreement, of course, has some benefits for both of us. But it has a lot of complications as well, because now you have to worry about the hard border that there is there with import duties. You have to make sure that you have certificates of origin to prove that you can have goods of UK origin or EU origin when they transfer the border. If not, you have to pay higher import duties. And so you have to worry a lot more about customs formalities, whereas in the past it was only VAT formalities. So this makes things a lot complicated, and you need to take care of a lot of more formalities.
Not working. I'm going to have to share it a different way. Sorry about this.
No problem.
So I think we'll just have to have it on screen like this, if that's okay, if people can see that.
Mm-hmm. All right. And what we've learned in the past 2 years is that it doesn't matter whether you're a big company or a small company. Everyone is involved or is having to face the difficulties with the hard borders that are there. So, but big companies are often better prepared than the smaller companies. But in fact, it doesn't make a difference. Huh? If you are sending a few goods from the UK into the EU or hundreds of goods, you still have to file the same formalities and take care of customs duties. What is really important, and we realized and saw in the past, that many UK companies are not considering enough what their responsibilities are, and especially about Incoterms. Incoterms determine who is responsible for transporting the goods from which place to another place, and where the ownership and the risks of the goods transfer from one party to another party. So these Incoterms, although they are not saying anything about VAT, they have an important impact to determine who has to pay the VAT in which country. And there is a huge difference, for instance, between DAP, delivered at place, versus delivered duty paid. If you have, as an Incoterm, delivered duty paid, that means that if you are a UK company selling goods to a customer in one of the EU member states, that you need to register for VAT in the member state, because when you apply DDP, you must pay the import VAT in the country of arrival. Whereas if you use DAP, it's the client who has to take care of that. So please check your Incoterms and see what is applicable for you, and who needs to take care of the transport and the risks involved. It's also important to know your supply chain, because we're not talking only about selling the goods, but of course you probably produced the goods or bought the goods somewhere. So check if you are party B in a transaction, you bought from party A and are selling to party C. Check in which chain you are, and how you bought the goods, and where the goods are going to in the first transaction, and where the goods are going to in the second transaction. And if there is only one transport, it might be that you could benefit from preferential treatment, like EU triangulation, where there is a simplified procedure for that. So it's really important to see where you bought goods, where you're going, where you're coming from, where you're going to, and who takes care of transport in each of the relationships. Yeah, you should also be aware of the fact that for some products, like food products or phytopharmaceutical products, there are special rules, not in the field of customs of VAT, but in regards of licenses that you might need for these products. And therefore we say also it's important to speak to each player in the logistic chain. That means do not only talk to your VAT advisor, but also talk to your transport company, to your customs agent, to your client, to your supplier, to everyone in the logistic chain. And very important, if you want to do business across the border, start in due time, because if you want to start tomorrow, you're perhaps already too late. because you need VAT registrations in more member states, and it all takes time. So please prepare in due time, because it might take a few months before you can actually do business across the border. So one of the extras to be taken care of is the customs formalities. Since there are now no hard borders now, if you are moving goods from the EU to the UK, that means filing export declarations in the EU and import declarations in the UK, and vice versa. When you are a UK company and exporting from UK and importing into the European Union, you need to file a lot of formalities. As you can see on the picture there, you need a lot of paperwork when you cross the border, and you need to submit many documents. Example, also the invoices. If you send an invoice, please make sure that you check what should be on the invoice. Not only the two parties, but also their VAT numbers, the place of where the transport starts, the place where the transport ends, etc. So you have to take care of good invoices as well. And in doing this cross-border business, you need to take care of several elements, like an EORI number. The commodity code of the goods is also important, so you can check what kind of customs duties are for these goods applicable, and which VAT rate might be applicable. And then, if you are going to transfer the goods from, example, UK to one of the European firms, you need to fulfill these customs formalities. And the question is, can you do it yourself? The bigger companies sometimes can, but the smaller mostly not. And so you probably need a customs representative. It's also difficult to find a good customs agent, so please start looking ahead, and don't wait until tomorrow if you need to start a few days later.
Hans, can I just ask one point there about the submission of the documentation? So one thing that has become apparent is if you have like a chain of businesses, so you act as in an intermediary capacity, including those invoices in that pack of documentation can sometimes be problematic for businesses, because obviously then when the recipient receives that bundle of documents, they can see the invoice from your supply, depending on how it, how it's structured. So sometimes your customer might then get to find out what you've paid for the goods. So obviously there's certain things there that you need to be aware of from a commercial perspective as well. This isn't all just about, indirect tax. There's some commercial issues that businesses need to be aware of and understand on those obligations, what they're actually needing to submit, to each of the parties in the chain.
Of course, you don't want to show your purchase invoice to the client who you're selling to. He doesn't need to know what you paid for the goods that you are that you are selling to him. So you should anyway avoid presenting purchase invoices to the client who you're selling to, and it's not necessary either. For customs purposes, you need to present your sales invoice if you take care of the transport or your client takes care of the transport. So please contact your customs agent to see what kind of documents you need to present to him.
Yeah, thank you.
All right. As I said, there are first place a lot of customs formalities, but also VAT formalities when you are doing business across the border. If you're selling goods from the UK to a client in one of the EU member states, you might need to register for VAT depending on how you structure your business and how you which Incoterms you use. If you, for instance, do delivered duty paid, then you need to register for VAT in the country of arrival. And please note that UK companies, since they are no longer considered as EU companies from a VAT perspective, when you need to register, some countries in the member states of Europe, they want you to appoint a fiscal representative before you can get a VAT number. This was, for instance, also is also the case in Belgium. Normally, a non-EU company that needs to register for VAT must appoint a fiscal representative. But since we have the trade agreement between the UK and the EU, Belgium considers you as a kind of preferential partner, and therefore we do not want or demand you to appoint a fiscal representative. So a UK company that needs a VAT number in Belgium, for instance, does not have to appoint a fiscal representative in Belgium, although you are a non-EU company. The process of registering is different in each member state. You have to file several documents, different documents. It's not a uniform system. Each member state has its own rules, and the processing time might be quite long. Like, for instance, in Belgium, you need to, when you start up the procedure to get a VAT number, it might take you up to 2 months or a bit more than 2 months even. So that's really something you need to bear in mind if you want to start doing business, start in good time, because the application procedure can take quite some time. And there's also anti-money laundering legislation, where if you aren't represented by a company like Van Havermaet, we need to identify you according to the anti-money laundering legislation, which also takes some time. Then about VAT recovery in the European Union. If you are a UK company that incur local VAT in one of the member states, for instance, you're buying goods there and the supplier charges you the local VAT, then you want to probably get the VAT back, and you want to claim it back from the authority. From which authority? Normally from the authority from the member state where you have paid the VAT to your client, to your the seller of the goods. But the European system we have with the European portal, where you can apply from your home country and claim refund of the VAT, does no longer exist for UK companies. So you can no longer apply that refund method, and you need to do it on a different basis. Normally, when you get registered in one of the countries, you need to do it via your local VAT return. That means you have to file in one of the boxes of the local VAT return, like in the Netherlands or in France or in Belgium. You can claim back the VAT by claiming it via a special box in that local VAT declaration. That's the case when you are registered there. But if you're not registered or do not need to get registered for VAT in one of the member states, then you can claim back the local VAT via the 13th directive, which is a kind of paper-based VAT refund procedure. It's a complex procedure. It involves a lot of paperwork. You have to make copies of your incoming invoices from which you will want to claim back the VAT and submit it to the authorities. Often they demand also the original invoices. So please be aware that if you present the original invoices, they might get lost in somewhere. So it's a complex system, but it's still existing. Some countries are a bit more simple to claim back the VAT, and they changed the paper-based refund procedure via an electronic VAT refund procedure. Like, for instance, Belgium did that. So if a non-EU company wants to claim back local Belgium VAT, and it's not registered for VAT in Belgium, it can be done via an online 803 form. So there are some countries, some member states where the electronic refund procedure is more simple than in other ones. Now, I would just like to say that there is an interesting tool which is created by the European Union, and I noticed that not many know this system. It's a tool, access to markets, it's called, and via this tool you can see what kind of VAT you have to pay, what kind of import duties you have to pay when you're transferring goods from one country to another country. For instance, in this example you see on the screen here, I try to see, and I noticed that you English like to drink tea, so the commodity code for tea is mentioned in the left box there. And when you send tea from United Kingdom to Belgium, this tool, via this trade assistant, gives you the clue of what you need to take care of, which formalities to do, etc. So yes, you can see, for instance, like the tariff on the import duties. There are no import duties on tea when they are coming from the UK into Belgium. But on the next screen, you will see that there is VAT involved. As I understand that the VAT rate for tea within the UK is 0%, but in Belgium, for instance, it's 6%. So if you import tea in Belgium, please be aware that you need to pay 6% import VAT. Although many countries also have a kind of deferral license where you can pay the import VAT not when the goods cross the border, but in a later stage when you file the local VAT return. Such system exists in the Netherlands, in Belgium. There are many countries where there is such a deferment system. Yeah, then one of the questions, question we often get from UK clients when they want to sell goods in the UK is, do we need to create a local entity? Do we have to create a local legal entity in the member state where we want to do businesses? Well, it's often helpful, but please be aware that it involves a lot more than just customs and VAT regulations. If you need to create a company, you often need to have a real physical address before the authorities recognize you as a local entity. Please also be aware that when you have a local entity, like in the Netherlands or Belgium, you need to pay corporate income taxes at the local rates. You need VAT registration, you need VAT compliance, you need to submit local accounts, you need to publish your accounts probably in some of the countries, you need to appoint directors in the company, etc. So it involves a lot more than just some customs or VAT issues. And therefore, what we see is that several of our UK clients decide not to create a local subsidiary or a local entity in Belgium, but just to have a local VAT registration for doing businesses across the border. For instance, what we suggested as a solution to several of the UK customers. As you know, the border between Dover and Zeebrugge is rather short. It's a short distance. So many UK clients decide to ship their goods into a warehouse in Belgium. Therefore, not a customs warehouse, but a normal warehouse, and use the services of a local service provider who will take care of the picking of the goods and collecting the goods, packaging, etc., and then sending them forward to clients within the European Union. So if you want to do that, a good suggestion is to do it as on the picture here. That means that you need to register for VAT only. You do not need to have a local entity, and the VAT number that you will get allows you to take care of the import VAT to be paid when you transfer the goods from the UK into the Belgian warehouse. Local import VAT is due, but you can deduct it as well. So it's normally plus and minus in your VAT return. And then when you start selling from the Belgian warehouse, please be aware that there is the local European rules still apply, as was previously the case when you were still an EU member. That means that if you send goods to business clients in other member states, it's an intra-community supply, which is VAT exempt in the country of departure. So in Belgium, VAT exempt, and is to be taxed in the country of arrival, but not by you as a UK supplier, but by the final customer. So that means that you can do business in such a way that you only need a VAT registration without having to take care of lots of other formalities. This is something we suggested to several clients, and they are happy with that. And even though if you are selling goods not only to business customers, but to private individuals, B2C sales, where the transport starts from the Belgian warehouse to the B2C client in another member state, you can use the one-stop shop registration. So if you are registered for VAT, you can additionally register for the Belgian one-stop shop system. And this allows you to pay the VAT of the country of arrival via one VAT declaration to be done in Belgium, and via one VAT payment to be done in Belgium as well. So it's an easy system, and this works for several of our clients.
Thanks, Hans. So what we're going to look at now is some considerations for UK businesses trading in the EU. So this is more practical considerations. Mm-hmm. So Hans has spoken now just before about, you know, the theoretical part of it. So, you know, how you might affect your VAT registration and how you might be able to get to trade in the EU. This is more about the things that you might need to think about on a bit of a higher level. So the country that you choose to VAT register in, there's some considerations here. For example, the ease of VAT registration and the general compliance. So although all of the countries in the EU operate with the same general rules and framework, each country has their own way of doing things. So each country has different obligations with regards to VAT registration. They, you know, the application for doing so is easier in some countries than it is in others. The general compliance, some of the VAT returns in the EU are much more detailed. So here in the UK, we fill out 9 boxes. And in some of those EU countries, you're required to fill out 45 boxes. So obviously, you know, that might be something that you need to take into account. If you're going to have someone in the UK preparing those VAT returns, then they need to be well versed on what's required. So obviously, if you don't submit your VAT return or your documentation, your payments on time, there can be penalties and interest for that. So it's just important to understand the compliance that's required. Other things as well, practicalities. Do they accept documentation in English? So if you're sending something from Companies House, do you need to get that translated? Do you need to you know, convert that into a different language? Or are the forms and the VAT returns available in English? Now, obviously, if you've got a UK person or a person who speaks English as their only language doing your VAT return, then it might be a bit of a difficulty for them to then, you know, undertake one of the returns in some of the other EU countries. The third one is something really important is if you've got a repayment of VAT, how easy is that to actually get a repayment from that country? In some of the EU countries, your repayment of VAT is offset against other taxes. So say, for example, if you've got a VAT repayment, but the country might think that you may have a CT obligation that's, 6 or 9 months down the line, they can retain that VAT repayment and, pay it off any other taxes that is due. So if you need that VAT import VAT repayment because you're using it for cash flow purposes, then you need to really consider how which country to VAT register in. As Hans touched on before, some of the countries you need a fiscal representative. So in Belgium, they have a scheme where that's not necessary, but in some of the other EU countries, you need to have a fiscal rep. A fiscal rep is a party that acts on your behalf, but not only for your administrative purposes, they are jointly and severally liable for any debts that you own. So anything where you fail to pay any of your VAT debts is passed on to your fiscal rep. So as you can imagine, the costs for operating as a fiscal rep can be quite considerable. So it's just something to bear in mind when you're looking at the general costs. Are you factoring that in? In some of the countries as well, you need to have an actual company set up in that country, and you can't use a branch or something more informal. So you just need to take that into account as well. And there's going to be formalities with having that company set up. So you might need to pay for accounts to be filed, and you might have some taxes that are due on that. Also, if you do get a repayment of VAT from the authorities, how is that paid back? Do you need a bank account in the country that you're VAT registered in, or do you need an account that has a euro bank account or something like that? Is there some obligations there that you need to think about? And finally, the point here was just we've got a support network here within Morrison Global, of which Cowgirls is a member, and we've got a lot of member states with great VAT and indirect tax advisors. So we've got people who can help you with these decisions. If it's something that you're thinking about doing in the near future, we can put you on calls with people. We can discuss what factors are important to you. We can look at your supply chain, where the goods are being routed through, and see whether the journey of the goods is a driver for the country to register in. And in some cases it may just be that administrative easement is better, and the one with the least amount of paperwork is best for you. But all of these things you need to give some good consideration to. Thanks, Claire. So for those EU businesses who are trading in the UK, it's a similar story, really. You need to understand your obligations. So as Hans set out before, if your Incoterms are delivered duty paid in the UK, you've got an obligation to VAT register here. So there's two things to think about there. Is number one, you're going to pay import duty when the goods come into the UK. And without a UK VAT registration, it will be impossible for you to get that back. And the second point is that you then need to consider what your paperwork and all of the obligations that you've got there. Are you able to submit the correct paperwork to HMRC? Do you understand what you need to do? In the UK, you don't need a fiscal representative if you're from the EU, but you can get one if you wish to have one. A fiscal rep is different than an agent. So Cowgirls can act as your agent in preparing the VAT returns on your behalf, and you can use our address for HMRC correspondence. But when we don't act as a fiscal representative, because it's not generally needed here in the UK. Businesses that hold stock in the UK, obviously there's more VAT implications there as well, because unless you hold them in a customs warehouse, then the goods are in free circulation as soon as they come into the UK. So that gives you an obligation to register for VAT. A lot of businesses don't understand the implications of, for example, holding call-off stock. So if you've got a customer here in the UK and you've got some stock that's held in a warehouse nearby, and the customer calls those off as and when they need them, that gives you an obligation to VAT register here. So, you know, it's some of those easements that we've been used to when the UK was in the EU are no longer relevant, and you just need to understand all of the implications of how you're trading. As Hans said earlier, you know, there's points there about customs duty reliefs. So if the goods are origin EU, then there is a duty relief when the goods are brought into the UK. So that means that you won't suffer any duty on the goods when they're imported to the UK. But something to think about is if the goods are then going to move out of the UK again, so back into Europe, for example, you're going to end up with a duty charge there. So if, say, for example, your supply chain is that you receive goods from Poland into the UK, and then you sell from the UK to Southern Ireland, there'll be, if the goods are origin EU because they were produced in Poland, when they come into the UK, there'll be no duty on those goods. But when you then resupply them into the EU, i.e. to Southern Ireland, there will be a duty charge, because even though the goods are EU and they go EU to EU, they come into the UK first. And because the goods aren't origin UK, they will be subject to a duty charge when they move into the EU. So it's really important to think about that supply chain and understand the physical movement of the goods to understand what your obligations are. Finally, here in the UK, we need to submit our VAT returns under something called Making Tax Digital. So that's pushed an obligation onto taxpayers to provide information to HMRC in a more sophisticated way. So not only do you need to submit digitally, so that's with specific software, you also need to make sure that your data follows a chain from the invoice to the VAT return, and HMRC can look at every step of that chain to understand how that invoice gets onto the VAT return. So that sounds really complicated, and it doesn't need to be. But a lot of EU businesses don't really understand what is required, so their data isn't sophisticated enough to comply with those obligations. So make sure that you engaging with your advisor as soon as you can to understand what's needed to comply with those rules.
Mm-hmm. Perhaps if I might add one thing, Gemma, when a EU business is selling to the UK and they need to prove that the goods are of EU origin, you can have it verified by the authority, but there is also the system, and I forgot to mention it earlier, with the REX registration. If you are registered as an exporter, you can provide your own kind of proof, making sure that you can prove that the goods are from EU origin.
Yeah.
And that allows you to avoid the higher import duties in the UK.
Thank you.
Yeah.
So just again, some practical considerations. There's additional checks for VAT registrations for businesses that are in the EU and don't have UK-based directors or shareholders. So routine delays from HMRC mean that it's taken up to 10 weeks for overseas VAT registrations to be processed. And that is if we can reply to HMRC with all of the information nearly immediately. So if there's any delays on the business's side, it can add to that delay as well. So it's as Hans said before, planning is key with any of these things. If you're considering selling to the UK, it really needs to be a quarter in advance of when you actually need to physically move the goods to make sure that everything's in place and you don't end up with irrecoverable VAT on your import. And the second point about the practical considerations for EU businesses is recovery of that VAT. So say, for example, you end up with a significant shipment the first time you move goods into the UK. How do you get that VAT back? You need, first of all, what you need is that UK VAT registration number. So without that VAT number, that VAT will be lost in the system. So effectively, you either would need to use an agent to ship the goods and import the goods on your behalf, or you need a UK VAT registration number. If the agent does it, it's not their VAT, so you can't recover that VAT. It's your VAT, but without that VAT number, you can't recover it. A bank account is recommended to expedite repayments of VAT. Some overseas businesses might struggle to get a bank account, but the other way that you can receive a repayment from HMRC is by a cheque or a postal order, and that can take a significant amount of time to be released from HMRC, go through the UK postal system, and then land on your doorstep in the EU. So, and then obviously you need time then for the banking system to process that. So the best option is to have a UK bank account if you're able to do so. We also find a lot of scrutiny on repayment returns from HMRC. So HMRC have professional scepticism when it comes to repayment returns. They don't like issuing repayments to businesses, especially those that aren't based in the UK, because they have limited powers to recover VAT if it's deemed to be incorrect or there's some issues with it. So HMRC will ask you to prove that VAT is due back to you. So they'll ask you for invoices, they'll ask you for copies of import documentation. They'll want to see everything is all in order before they release that payment. And we touched on it before about the import VAT. So PIVA, postponed import VAT accounting, gives cash flow benefits to businesses that import into the UK. So that means that you don't need to pay import VAT when the goods are physically moved into the UK. You can, rather than paying for it at the port or via your agent or a deferment account, you can just put that VAT through your VAT return, which means there's cash flow benefits because there's no actual cash payment to HMRC. So there's some other tax and accounting implications, obviously, of having an establishment or a company here in the UK. So if you've got UK-based staff, so if you've got any staff that work in the warehouse, are you aware of your obligations there? You know, do you understand what's needed? Are you operating payroll properly? There's obviously UK personal taxes and employment taxes that need to be paid there. So you need to understand exactly what your obligations are. Again, if you've got a UK company here, so if you've got a company set up with Companies House, you have obligations to file accounts and submit documents to that entity to make sure that you're compliant with the rules. And also, if you're selling goods in the UK, you might be liable for some corporation tax here as well. So obviously, when you're looking at selling into the EU, you need to factor all of these costs into account when you're looking at what your values on your prices are. So next, we're just going to look at quickly run through a few changes that are happening in the UK. So this is businesses that trade in the UK. So that's whether you're UK established or if you're established overseas, things that you need to think about. As I touched on earlier, there's been some news on the Northern Ireland Protocol. So that was announced yesterday by the Prime Minister. So we're yet to see how that's going to impact businesses. And as anyone who's a fan of British politics will know, what's put on the table is not always what's put through the legislation. So we'll need to see and scrutinise that in greater detail as it goes through the Parliament. There's been an overhaul of the penalty system for late submission of VAT returns and paying VAT late in the UK. So it's just to make businesses aware that the system is supposed to be made more fair. So businesses are penalised for the lateness of the return rather than how many times you've been late. But it's just to make businesses aware that the rules are quite tricky surrounding it. So make sure that you're paying your VAT on time and submitting that VAT return to avoid any penalties as far as you can. There's also the customs handling import and export freight, which is called Chief, is being replaced later on in the year by the Customs Declaration Service. So this was supposed to happen last year and earlier on this year, but there's been a lot of issues with the system, and HMRC are constantly finding issues with it, and it's not working as expected. So that is supposed to be changing over in November 23, but I'd expect that there's going to be some changes to that. Okay, Claire? And then changes in the EU. So the EU have been carrying out a process of looking at VAT and how it interacts with the way that businesses sell in the modern age. So they're trying to bring VAT kicking and screaming into the 21st century, I think is the best way to put that. So what they're trying to do is simplify the system and make it more compatible. So, you know, they understand now that business isn't restricted to a single country. You know, people do business throughout the EU, especially with this digital age. So especially with electronically supplied services, apps, games, telecommunications, that sort of thing is incredibly complicated from a VAT perspective, because the rules are very, very old, and they didn't envisage this type of supplies of services when they set the rules out. They're going to reduce the need for multiple VAT registrations within the EU, which will come as a relief to businesses who are constantly submitting more than one return. And with that will come hopefully a reduction in compliance costs. They're also moving from a paper-based system for submitting that documentation that you need to move goods into the EU to a electronic system, which should speed things up and make it easier for you to comply with the rules and keeping everything all in one place. So hopefully those are all positive changes. So just a summary and a bit of a recap on where we've got to there. As we've said a couple of times here, the Incoterms and the terms of trade are absolutely critical to understand your indirect tax obligations. It's worth just, you know, raising this with your finance team and with your sales team and understanding exactly what Incoterms you're selling to who, and that's the case whether you're selling from the UK into the EU or vice versa. Again, with those businesses that sell into Northern Ireland or into Southern Ireland, you need to be really, really careful there as well, and just make sure that you understand all of the obligations. VAT registration in the EU and the UK, it can be really lengthy, so plan ahead, make sure that you're looking at, you know, at least a quarter to get those formalities over the line before you start planning your sales of your goods. Again, have a think about which country to VAT register in. The one that the goods fall in first might not be the best instance for you. So there might be some administrative easements that you can use in some of the other countries. You might find that the obligations are a bit more straightforward in some of the other countries. And actually, do you actually need that VAT registration in, say, for example, Calais? Do you need that registration in France just because the goods are moving there, or can you use one somewhere else and make it a bit easier for yourselves? Hans's tool, access to markets, will help you to understand what the costs are of selling into the EU. So, for example, have you actually understood the cost of the duty charge into the EU? So if you're selling something like clothing, for example, the duty rates on that is quite significant. So if you haven't taken into account the fact that there's going to be duty on that movement of the goods, then, you know, some of the items of clothing can be 14 and 16%. So if you fail to take that into account when you've looked at your prices, it means that, you know, it might not even be profitable for you to sell in the EU. So you need to, you know, factor those costs in. And again, just a reminder that there's support available through our Morrison Global Network. We've got loads of really good advisors who know what they're talking about and can give you practical, straightforward advice and support. You know, we can, as Cowgirls, we can act as a key contact and a conduit to help you with anyone who you need to speak to in the EU. So you can ask us, and similarly, you know, Hans can do the same from Belgium and on that side in the EU. So if you've got any questions for any of us, then, you know, please do get in touch. That is the end of all we were going to chat through today. So unless Hans has anything extra that he's thought of while we've been talking, otherwise, if anyone's got any questions, then please let us know in the chat function, or you can unmute yourself and ask us a question if you want everyone to see your lovely smiling faces. So I think we did have one question, Hans, which was about the physical address. So if you remember, what you were talking about there was if you have an address in the EU, do you need to have a physical company or something like that? Do you need an actual office, or can we just use Van Havermaet as your agent effectively?
Well, if you, as a UK company, just need a VAT registration in one of the member states, you do not need a physical address. You do not need it yourself. You can rely on an accountant or a local vet advisor, and you don't need a physical address yourself. But if you will establish a legal entity in one of the member states, in most member states, you will need a physical address. If not, the government will not give you a VAT number, for instance. And this is very painful because without a VAT number, you cannot start doing business.
Okay, so that's another consideration then, isn't it, when you're thinking about which country to get VAT registered in? Okay, have we got any more questions? Okay, so is there any guidance regarding physical movement of goods through EU states from the UK to countries such as Norway following Brexit? We have come across hauliers requesting Norwegian customers' EORI numbers when they don't have one. So, sorry, who's this? Let me just look. Oh, Judy. Okay, do you want to unmute Judy and let's see if we can get somewhere with this. So the goods are hello. The goods are moving from the UK through the EU. So are they just
in transit? Yeah, transit.
Yeah. Okay. So the goods are moving there and then they're going to Norway. And then are they asking for any?
It's mainly just the haulier company requesting an EORI number, which we know that the customer do not have one, that they are not requested to have one to do trade with the UK. But I found some information about contradicting information from very different sources, where some say they all should have one, but some say they don't require one. So I really don't know where we'll find the proper information regarding this.
But if I mean, Hans might have some better sort of input on this, but if I apply logic, if the goods are only in transit, they're not in free circulation at any of the point that they travel throughout the EU, then there's no obligation there, is there? So I don't understand why an EU EORI number would be needed anyway. I don't know whether that makes sense to you.
Yeah, please also note that Norway is not part of the EU region for VAT, from a VAT perspective. So it's not part of the European Union for that purposes. They might have their own rules. The European Union has a trade agreement with Norway as they have with the UK. So it's based on a trade agreement only, and they are not part of the European Union.
Yeah, I think the logic there is correct, and we thought the same too. But it's just we come across this change of requirement following Brexit. So I don't know whether just some business are misunderstood the change of rules. Yeah.
That might be because of the fact that there is a trade agreement which is all for many years in place already between Norway and the European Union, but since the UK left the European Union, this trade agreement does no longer apply between Norway and the UK. So therefore, probably there are new rules in place.
Judy, I do think we've got someone in one of those Baltic states that has helped me with something on Norway before. Norway before. So I might just drop them an email and just ask the question. It doesn't feel right to me, but it doesn't feel like a Norway problem. It feels like an EU problem. So I don't know whether we'd get a sensible answer from Norway, which is probably we're not in the EU, so why would we have an EORI number?
Yeah, that would be great. Thank you, Gemma.
Yeah, let me do that.
Thanks.
Okay,
we've had a question in from Eve. Eve, if you want to unmute.
She's shy.
Oh.
Let's see. If the goods are moving from an EU company to another EU company and title and ownership via purchase and sales invoices. oh, I can't, in the UK, how is VAT dealt with and how does the EU customer claim the VAT? Okay, Eve, so what are you saying that so it's an intermediary or a triangular transaction where the seller and the purchaser are both in the EU, but the goods are in the UK, is that right? Okay, so if the title is in the UK of the goods, one of those parties would need to register for VAT in the UK. So either it would then fall back to the Incoterms on that. So what, you know, if the Incoterms were, for example, X works, it would be the customer that would need to register for VAT and account for the VAT there. Does that make sense?
If the goods are within the European Union, it's more difficult, huh? Because if they are transferring from one member state to another member state, so party A is, for instance, in the Netherlands, and party B is UK, and party C is France, and the goods are moving from the Netherlands to France. Please note that company B, being a UK company, needs to register in a member state, at least one member state. And if they are registered in one member state, they can apply simplified triangulation. And if not, then they need to register in the country where the goods arrive. So it's really important to see from where to where the goods move and in which relationship the transport takes place. In the relation A to B or in the relation B to C. So these facts are really important to give proper VAT advice.
Is that helpful, Eve?
Okay.
Okay, has anyone got any other questions? You can also let Claire know if you have any questions and you feel like it's a daft question or you don't want to ask in front of everybody else. You can always send it to Claire and she'll pass it on to Hans or me.
As I said at the start, I will send out a copy of the slides and a link to the recording so everyone can look back at what we've covered today. And as Gemma said, if you have any questions, just let me know.